How's it going today, guys? I hope you're having a great day so far. So in this video here, we're doing an update on my top 5 stocks for 2018. If you guys are new to my channel here and you're not familiar with what this is, back in December, I made my top 5 picks for 2018, and I've been tracking this portfolio every single month just to track the progress. And it's more of an interesting way to make some stock picks, to have some accountability there and see how you're doing with your picks. Now, I did completely forget about this video last month. I apologize about that, but going forward, I'll make sure I do this every single month around this time, around the end of the month, updating you on this stock portfolio. And as you can see here, we have some big winners in this portfolio, and we have basically one big loser. Now, for a while there, my speculation was looking a little scary, but it's paid off as of right now. Now, when you're speculating, that share price could go up or down. I mean, I could see Chesapeake stock going to $10 a share, or it could go to $2 a share. You have absolutely no idea where a stock like that is going. But to keep things interesting, I did include Chesapeake as a speculation. I had GE in there as a recovery pick. Obviously, GE has been the worst performing stock. I had Applied Materials as my technology pick. Obviously, Amazon and Boeing speak for themselves as far as one being the growth stock and one being the blue chip. However, both of those are really very strong growth stocks at this point in time. But let's go ahead and take a look at this portfolio performance so far. So since the inception of this portfolio, I'm up 12.25%. The best performing stock is obviously Amazon, up just under 50%, which is insane to see that kind of return from a stock in such a short period of time. Runner-up is Boeing with a 20.69% return. Chesapeake is up 20%, and they've been up a lot more. I'm going to show you that chart there. I mean, when I added this stock to this portfolio, it was at $3.84, and they've been up above $5 a share. So there's been points in time where I've been up well over 25% on this stock based on when I'm looking at this portfolio. Applied Materials is still has not gotten any love from investors here. They're down 6.5% from when I added them. We're going to talk about that in this video, why that is. And then GE is still just a mess, down almost 25% since they've been added to this portfolio. Now, the other thing I wanted to mention before I get into this full video here is that Stock Radar, my private stock market investing group, is officially back open, and I'm running the best sale I have ever run before. A membership to Stock Radar is $19 per month, but I am dropping the first month to $5. It's going to be for a very short period of time. I want to allow people to get in, be able to try it out, and see if it's for them. And I offer a full refund on that first month. So if you get in there and you decide it's just not for you, I offer a full refund, no questions asked. But for a limited time, you can join Stock Radar for $5. Check it out. See if it's for you. I have over 15 hours of content in here. I checked and I have 24 different lectures. You guys can read the different testimonials here, and you can click on this link as well and get a bunch of different testimonials. But I have over almost 25 different stock analysis videos in here. I have over 15 or 20 bonus videos, and I have multiple different courses on investing in the stock market in here, all of which you'll have access to as a member of Stock Radar. And I also have not done a giveaway for Stock Radar in a very long time. So what I'm going to do is I'm going to do 5 giveaways this week, 5 memberships to Stock Radar. All you guys have to do is follow the instructions down in the description below on that giveaway. And I'm going to be giving away 5 lifetime memberships to Stock Radar in next week's video. So make sure you guys follow those steps and do that if you're interested. And there's also a link to enroll in Stock Radar. Get in there for $5 if you are interested. So first of all, let's go ahead and talk about Applied Materials. This is the stock I'm down about 6% on, and this is the information here from their Q2 earnings report. So it says here, this is from Zacks.com, and any of these articles, if you guys are interested in reading more, I've linked them up in the description below. So they reported earnings of $1.22 per share, which beat Zacks estimates by 9 cents and came in above their guidance range of $1.10 to $1.18 per share. And earnings were up 15% sequentially and 55% year over year. So 55% growth of earnings from that quarter a year prior. So they're seeing exceptional growth there in the bottom line earnings. And they're also seeing strong top line growth as well. Revenues of $4.57 billion beat the mark by $115 million, and revenue was also above the guidance range of $4.35 to $4.55 billion. So this was up 8.6% sequentially and 28.8% year over year. So it's also good when you see a company's earnings growing a lot faster than their revenue. That means they are achieving better profitability. So Applied Materials had a stellar quarter here, 55% year-over-year growth of earnings and 28.8% year-over-year growth of revenue, but the stock is just not getting any love at this point in time. So despite the fact that they had a great quarter in terms of revenue and earnings, their lower than expected third quarter guidance put the stock into a sell-off, and as a result, this stock is down 6% in my portfolio. And again, just in case you guys aren't familiar, this is not a real portfolio. It's a dummy portfolio that I set up on Yahoo Finance. And if you guys are interested in tracking any stocks, it is kind of a cool tool to be able to build a portfolio and then track your picks over a period of time. And you can even use that for maybe some kind of paper trading if you want to be investing on paper before you do it with your actual money. It is a very interesting tool. But I wanted to just go through here and remind you guys again of why Applied Materials was on this list. I see this as a undervalued technology stock. It's not one of these stocks like Nvidia or AMD that is a high flyer. This is a stock here with a trailing PE of around 16 and a forward PE of about a 10.5 or 11. And they have a PEG ratio of 0.57. So I think they have a very attractive valuation. I did a full analysis of this company over in Stock Radar if you guys are interested, or if you're already a member to that. And that kind of goes into more detail as to why I am bullish on this stock in particular. So moving on now, let's talk about Amazon stock. This is the top performing stock for this portfolio. This says here Amazon misses on revenue, but earnings came in more than double what the street expected. It's always comical to me when analysts are trying to post estimates on what they're expecting out of Amazon because they're usually way off, and this was no exception to that. Amazon reported mixed results for its second quarter earnings on Thursday, and so that again is why we didn't see any kind of huge movement with that share price. The stock was up about 3% in extended trading, so there was no huge move here with Amazon stock like we saw with Google. They had very strong earnings, or we saw with Facebook having very poor earnings and falling 20%. So there was a huge beat on earnings, but a narrow miss on revenue, while third quarter sales guidance fell short of street estimates. So again, kind of similar to the situation there with Applied Materials. Third quarter guidance lower than expected. They had very strong bottom line growth, but they missed the top line growth numbers. So this is how the numbers panned out here. Earnings per share of $5.07 per share versus $2.50. So they were more than double what was expected of them. However, revenue came in at $52.9 billion versus the $53.41 estimated. And then Amazon Web Services revenue beat as well at $6.1 billion versus $6 billion expected. Okay, moving on now, let's go ahead and talk about Chesapeake stock. Now, Chesapeake is reporting earnings on 8/1, which is actually the day I'm uploading this video, so I have no idea where the stock is going to go. It could be down 10%, 20%, it could be up 20%. I have no clue. When you're speculating, you really have no idea what is going to happen with that stock. But anyways, we added Chesapeake to this portfolio in December. So that would be all the way, oh, actually I have to go back 1 year here. We added the stock in December, around the 25th at let me check here. We added them at $3.84 per share. And as you can see here, they went into a massive sell-off all the way down into the $2 range. And this was when I was looking like an idiot. People were saying, why did you put Chesapeake in this portfolio? But that can be what happens when you speculate. And then we have this happen here as a result of the rally in crude oil prices and natural gas prices. And this stock went all the way up into the $5 range, as high as $5.40 a share. Now that stock has come down a little bit, and now they're back to a price of $4.58 per share. So massive amounts of volatility with this stock, trading up and down. This is a stock with a PE ratio of a 4.4. But don't mistake this for a good quality investment. This is a company that is very heavily burdened with debt, but it's an interesting speculation, and I'm curious to see how this stock pans out for the rest of the year. And again, the reason for this is because of the rally with oil prices. As you can see over the last 3 months, not much movement with the oil prices. Over the last year, they're up about 40%. Over the last 3 years, up almost 50%. And if you look at the 5-year mark here, you can see where oil prices have been extremely low, but now they are beginning to climb at a sustainable rate. And as oil prices climb, that's going to help companies like Chesapeake Energy. Okay, moving on now, let's talk about the worst performing stock in this portfolio, General Electric. So they reported earnings that were very poor, which was to be expected. General Electric shares fall after profit drops 30%. The industrial conglomerate said second quarter earnings per share fell 30% from last year because of weakness in the power division. GE Power has been the thorn in the side for this company. Aviation and healthcare are phenomenal segments of their business, but power is dragging everything down. GE reaffirmed its financial outlook for the year, saying it continues to expect full-year earnings of $1 to $1.07 per share. So as a result, GE stock dropped more than 4% in the trading on Friday, closing at $13.12 per share. And at this point in time, I believe they are even below that, trading at 13. Actually, they are above that. They're at $13.31 per share at this point in time. So they're a little bit above that. I'm really not expecting much movement with GE at this point in time until we really see some strong turnaround with this company. But one of the good things that I saw here is that the CEO, John Flannery, said in a statement that GE's review of its business is now complete. He was conducting a full review of the businesses and the whole company and figuring out what makes sense and what doesn't make sense. And one of the things that came out recently is that GE is going to be spinning off the healthcare business, which is something that I think is a very reasonable decision that they came to. Earnings in the latest period were fueled by GE's aviation and healthcare businesses, while the company said its power market continues to be challenging, with orders down 26% from the same period last year. So they have two businesses that are doing phenomenal, which is healthcare and aviation, and one business that is dragging down the whole company. And that has pretty much been the story behind GE for the last year and a half or 2 years, has been problems in the GE Power division. And then finally, let's talk about Boeing, another stock that's been performing very well in this portfolio. Now, Boeing has been up and down. There's been some volatility with this stock surrounding the trade war fears with Trump and China. So this has been a stock that has had some ups and downs in 2018. But Boeing reported earnings and shares slid after commercial airline revenue and 2018 earnings per share forecasts disappointed Wall Street. So Boeing sticks to its full year 2018 earnings per share guidance of $14.30 to $14.50, below the expected earnings for full year earnings of $14.56. And the second quarter earnings beat Wall Street estimates for top line and bottom line. So again, this is the same thing we've been seeing here with these other reports, is that they've beat on the top line and bottom line, but the guidance disappointed Wall Street, and that can ruin an earnings report alone, as seeing weaker than expected guidance. So we didn't see any explosive moves here with Boeing stock, but they did have a very strong quarter in terms of their earnings and their revenue. So the earnings came in at $3.33 per share versus $3.26 forecasted, and revenue came in at $24.3 billion versus the $24.04 billion forecasted. So it was a strong quarter overall, but it was just that lower than expected forecasting for full year earnings per share that disappointed investors. But I still think Boeing has a lot of potential for the remainder of 2018 and going forward. And I still see this as a sound blue chip investment. But I'm glad that this stock has not been going off like crazy as it did in 2017. It's growing at a more sustainable pace at this point in time. But anyways, guys, that's going to wrap up this video here. I hope you enjoyed it. Like I said, all these articles are linked up in the description below if you want to read more about these reports or anything mentioned in this video. And then do keep in mind, I'm giving away 5 free memberships to Stock Radar, lifetime memberships. All you have to do is follow the instructions down in the description below. And Stock Radar is officially back open. You can join for $5 for the first month, and then after that, it's going to be the normal price of $19 per month. And do keep in mind, if you guys have any doubts about this, you can try it out for the first month, and I offer a full refund, no questions asked. All you have to do is send me an email, and I will get you that refund, usually within about 24 hours, so you guys can try this out for $5 and see if it's for you. But thank you guys so much for watching this video, and I will see you in the next one.